To build anything that truly lasts, it takes time.
First of all, and like you said, it's an action-packed week, in terms of markets. But first, let's take a look at how the markets fared last week. Now, Wall Street did end the last week on a high note, fueled by strong earnings and recent trade deals with Japan and Indonesia. On Friday, the Dow rose 208 points, or about 0.5%, whereas the S&P 500 that gained 0.4%, which was its 14th record close of 2025. Nasdaq, on the other hand, that added 0.2% and logged its 15th record close this year. Now, this week is very crucial with earnings from over 150 S&P 500 companies, including the likes of Meta, Microsoft, Amazon, and Apple. Now, investors will closely track AI spending commentary for cues on tech valuations. Now, the Fed's two-day meeting wraps on Wednesday with no rate change expected, but markets will seek signals about a possible cut in September. Apart from that, Thursday is going to bring June PCE inflation data, and that's expected to take up to 2.4% on an annual basis. Other than that, there's jobs data that will be also in focus, with July payrolls forecast at 1,15,000 and unemployment slightly rising to 4.2%. On the other hand, there's tariff decisions that are also due on August 1st, that is on the Friday. Now, investors, meanwhile, are also awaiting more details from the US and China trade talks that are expected to begin later today. Now, these talks come on the heels of President Donald Trump's announcement of a fresh deal with European Union, imposing a 15% tariff on most EU goods, including automobiles. So that's how largely the US market setup is looking like today. But Ankita, how are things looking on the crude front?
Absolutely. Let's talk about the crude and how, where the crude is perched at. If you look at the oil prices, now oil prices have eased on Friday and settled, at a 3-week low, as traders are worried about the negative economic news from the China and the US, deal that will come through, or the growing supply concerns as far as the China and US are concerned. Losses were limited by the optimism of the US trade deals. That could perhaps boost the global economic growth and oil demand in the future. Now, Brent crude futures fell almost 74 odd cents to, or 1.1%, to settle in at $68.44 a barrel, while the WTI fell 87 cents or 1.3% to settle in at $65.16 a barrel. Now, those were the lowest settlement levels for the Brent since July the 4th and WTI since 30th June. Now, for the week, Brent was down about 1%, with WTI down almost 3%. Now, the US is preparing to allow partners like Venezuela state-run PDVSA, starting with US oil major Chevron, to operate with limitations in the sanctioned nation. That is what the word coming in from the sources. But this could really boost Venezuelan oil exports by a little more than 2 lakh barrels per day. The US refiners would welcome this, and as it would ease the tightness in the heavier crude market. That is the word coming in as far as the oil is concerned. But the oil prices net have moderated, have come off their highs. In fact, last week we did see, like I mentioned, cuts of almost 1 to 3 odd % on Brent and WTI respectively.
All right, so that's how crude is looking. But let's also